guys, my name is Tembi Kandanga, your source for all things personal finance. Welcome back to my YouTube channel, guys. I know it's been a minute since I dropped a new video, but hey, here we go. Life has been keeping me busy. So this specific video, I will be talking about real estate investment trusts, and I just want to give a quick shout out and apology to the very kind gentleman who requested me to make this video a few weeks back, and I just hadn't found the time. So yes, today I decided I have to fulfill this request. So I will be talking about real estate investment trusts, or also known as REITs. Okay, just for those who don't know me, well, not that you don't know me, but who don't know, I do have a Twitter page where I did cover real estate investment trusts in a thread about 2 weeks ago. So if you want to just read a little bit more on that, it's on my Twitter page as well. Okay, so I will just be talking about exactly what are REITs, what are the advantages of REITs, how do you earn money or make money from owning REITs, and also how do you buy REITs? How do you get into this asset class? So REITs basically are companies that own, build, and or manage income generating or income producing properties. Okay, so when we're talking about income producing properties, we're talking about shopping malls, office complexes or commercial buildings, healthcare facilities, hotels, even factories and warehouses, and residential property as well. So as long as it can be built and rented out, this is the business that they're in. Okay, so now the good thing or the advantage of owning REITs is that you can get into the property space, investing in property, without actually having to go and physically buy a building. So you're just buying into a company that already does that for you, which is a great thing because obviously it's cheaper, it's way quicker, it's way easier as well. Because when you're obviously buying a physical property for investment purposes, you have to get a deposit. You have to then go to the bank, find this property, find the perfect location. If it's an investment property, you don't buy in any location, you have to buy in a profitable location. So there's so many factors to consider. Whereas with REITs, all of this is done for you, basically, right? Thing is also owning physical property, just another thing, you have to pay maintenance, you have to maintain the property, you have to find a tenant, there's rates and taxes. If it's obviously in a complex, you have to pay levies. So, and also with physical property, should things go wrong and you want to sell it, it takes way longer to actually sell out. So these disadvantages of owning physical property are the advantages of owning REITs, or listed property as they are also known, because all of that is done by the REIT management company. Okay, so you buy a share today in the REIT, and if you don't want it anymore and you want to be out, you can be out tomorrow. The property is not yours, it's not in your name, right? So yeah, that's just, I wanted to mention that is how REITs work. And just in terms of how they behave on the stock market, because they are bought and sold on the stock market, they are they're more sometimes classified as equities, just because they tend to behave the same way. But there are a few differences, and quite big differences, because obviously the real estate market has its own drivers and detractors in terms of when it's booming and when it's dropping. That does not correlate to general just equities, shares, and stocks. So I would prefer, if you're going to obviously consider adding listed property to your portfolio, always classify it differently, show it differently, give it its different weighting in your portfolio, so that you understand that these things don't perform the same way. Just to give you an example, like right now, the listed property market, the REITs market, is in shambles. It's a bloodbath. Like, they are losing value. And that's not really what you're seeing in the general equity market with shares and things of that nature. Actually, because we thought, because of COVID, things would be really bad. But the shares market has somewhat bounced back and recovered from from what happened, from the big drop that happened because of COVID and lockdown and things of that nature. And the real estate market is probably only going to get worse. People are going to start defaulting. They're not going to be paying their rents. Properties are going to be auctioned and things of that nature, which those two things, they're completely different in that way. So that's why I say, you know what, reflect your property investments differently from your shares and stocks, so that you can understand that these things they're not perfectly correlated. They're just a little bit, slightly correlated, but not perfectly correlated. Okay, let me just move on from there. So how would you earn money if you own REIT shares? If you own a REIT or a stake in if you own REIT shares, or if you own a stake in a REIT unit trust or exchange traded fund, how do you earn money, right? You earn money basically by the companies having to pay at least 75% of their distributions as dividends. Okay, so REIT companies where you will buy a stake in have to pay at least 75% of that income that they collect from the properties that they manage and own. They have to pay that 75 back to shareholders, which would be you. That's what you are classified as if you own. All right. So there's that guarantee that you always get your money back. Guarantee. Because nothing is guaranteed in life. I just wanted to put this like this. Yeah, and then also obviously if you buy a share in a REIT company, if you buy a share at 50 Rand and in 3 years time your share is now trading at 100 Rands, then you have made a profit. So that's also how you can make money. But obviously you can only realize that profit when you sell at the higher price. So the profit is theoretical until you actually sell your shares in the REIT company. Just want to make that clear. So yes, it's two ways: capital appreciation, which I just explained, and also dividend distributions. Okay, and then let me just move on to how you can buy or get into REITs. Now that I have yapped about them, how can you get into them? How can you buy them? Okay, so you can own direct shares in the REIT company itself. For example, Growth Point, Vukile Properties, Fortress. You can go to a stockbroker and say, I want to buy shares in one or all or more of these companies. Just consider, obviously, stockbrokers have their minimums in terms of investments. They have their own fees, everything, nothing is free on top, in that regard. You can also, consider using online trading platforms or stockbroking platforms as well. There's so many options in terms of stockbrokers. You don't have to be confined to just a traditional stockbroker in that way. So yeah, you can own your shares individually like that. You can also, the thing is with owning the individual shares, you only own a share in Growth Point or a share in Vukile or a share in Fortress. You have to buy them. Okay, that takes about a lot more money, let me just say. But if you own a property unit trust, or not own, but if you buy into a property unit trust, you will just buy into a pie, a beautifully well-made, well-baked pie that invests in only REIT companies. Okay, so these kinds of unit trusts are usually called property income fund or listed property fund, something of that nature. So all you need to understand with this is these are unit trusts that invest only in listed property companies. They invest in REITs, so you can get the benefit of it. They do it on your behalf, and they have maybe about 10 or 20 of these in the portfolio, and you buy a chunk of this beautifully made pie, and that's it. And it's more affordable. They tend to have minimums of about maybe 300 to 500 Rand. You can put it on debit order, and that's what you'll be just contributing every month. So yeah, just an example, there's the Sanlam Property Income Fund, and then there's the Sanlam Namibia Property Fund. Okay, I'm specifically mentioning this because the gentleman who asked me to make this video is in Namibia, so there's your option. I didn't find any other ones in Namibia except that one. But just know that you're not limited to that one just because it's the only one in Namibia. Just know, guys, we can also invest in companies like Growth Point and Vukile and Fortress because they are also on the Namibian Stock Exchange. They are listed there if you want to invest in them directly. Okay, so, and then also just another thing I wanted to mention. When I was talking about the Sanlam Namibia Property Fund, it's not listed properties in Namibia. It is still REIT companies in South Africa, because our market is small and our investment options are very heavily tied to South Africa. And so when you see the Sanlam property, Sanlam Namibia Property Fund, you think, oh, it's investing in Namibian properties or Namibian REIT companies. That is not the case. They actually, if you check the fund fact sheet and you look at the top 10 holdings, you will find all of them are Namibian, South African companies. Okay, just to give you an idea. Okay, and then also you have another way of investing in REITs, which is through Property Index Tracker Fund, which is also known as an exchange traded fund, which just tracks the index of listed properties. So that's really what it is about. It's just almost like a unit trust, but there's no fund manager who's there making the buying and selling decisions under the fund, under the unit trust. Under this exchange traded fund, it's just tracking the index, the listed property index. So under this, you have companies like Satrix Property Index. They're also this specific index is also available for Namibians to buy and hold this specific exchange traded fund. I know it's also listed on the Namibian Stock Exchange and it's listed on the Johannesburg Stock Exchange. So yeah, the options are there, guys. Let's not, let's just get into it. Let's not be afraid to do what we have to do to build a little bit of wealth. I wouldn't be doing you guys a good service if I did not mention that listed property right now, I think I did mention at the beginning, that listed property right now is going through hell. Things are not looking good. If you just do a quick search of any of the funds that I mentioned here, like look at the Sanlam Namibia Property Fund. Just do a quick search and look at the what is it? The newest fund fact sheet. So you look for a fund fact sheet from August, okay, or July. Look at the Satrix Property Income Index Fund. It's so bad, guys. Like property is going down because well, right now COVID and a whole bunch of other things. So yeah, I wouldn't be doing a proper job if I didn't tell you right now property is not doing so well. Listed property is not doing so well. Obviously, there will be a recovery, there'll be a bounce back. That's what the market does. Everything goes down and it goes up again. And also, everybody, you have to understand that, you want to buy when things are low. Okay, when things are red and going down, that's the best time to buy. But we don't know how long they will keep going down. So you might buy today because your prices are good. It's going down. You're getting at a discount. But it might keep going down. That's just something to consider. So yes, in terms of listed property, it is a buyer's market. We don't know how long it'll be a buyer's market. So the longer it continues to be a buyer's market, the more, if you own listed property, you will continue to lose just because it'll get cheaper and cheaper and cheaper, which means if you buy it today at 20 Rand, in December, it might be selling at 5 Rand. And now you have to hold on to it. What are you going to do? Or sell it at a discount and lose money. So just something I wanted to mention. That's why, property, it does behave like shares in that way. Okay, guys, I hope I have covered it all and answered any questions that you might have while watching. If not, you can comment below. Don't forget to engage. Don't forget to like and don't forget to share. I have to get used to repeating these things. But yes, like, comment, and subscribe, guys. Thank you so much for watching. See you in the next video. Bye.